Yeah.
Order filled. Check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it.
How you guys doing? Welcome back. We have a special guest, JC, with us. And anyways, I'm just going to get right into this. Let's bring JC on. How you doing today?
How you doing? You good?
Yeah, everything's good. Weather's great, but we got 2 new dogs, and they're driving us insane. They're 4-month-old puppies, and they're both giant German Shepherds. One is the most timid, cute little like sweet girl, you know, and the other is like a wrecking ball. Everywhere he goes, he just barrels through, and it's like, oh my gosh, is this thing gonna calm down ever?
How old are they?
4 months. 4 months. So we got him a little bit late, but I couldn't find any down here. So this is all we ended up getting.
When they're young, they have a lot of energy, right?
Oh yeah, too much energy, but very sweet and very smart dogs. I've never seen dogs as smart as these. They're so amazing. But yeah, basically, I'd just like to get into it. You have any stories to how you got into trading? Like, what actually made you interested to bring you into trading?
So it goes back, like if we really go back, like at the beginning, the first time that I started getting interested in, the stock market in general, just the stock market, was when I was in high school. I was around 16, 17. I had downloaded this app. I don't know if you have it in the US. It's called Trading 212. And it's an app, where it's like Robinhood basically for Europe, because I'm French at first. And I started looking into the stock market, but at that age, of course, I didn't have any money. I didn't know anything. So for a couple of years, I just like was looking at it more or less into it. I had like, for example, demo account and everything. And then after, a couple of years, let's say around my when I was 20 or something, I started really getting more into it. I started trying to, I learned how, for example, how to code. And with a friend, like we had built like some, we had done some algorithmic trading. We had looked a lot into it. So I did a lot of things like, I traded, for example, stocks, oil contracts, future contracts. I did a lot of things before finding something that was fitting me.
Well, for me, I was more of a, I was like, I looked up to it was like a celebrity, the stock market to me. I fantasized about getting into this. I really wanted to. It was just this big thing. Like there was a computer. I could be a computer engineer. I could be an author. I could trade stocks. I don't know. But anyways, I just looked from the outside and I started looking into like I don't know how I even found it, but I got emails from these. I don't know if they're pumpers back then or what they were, but it was an email. And it'd be like a really cheap little penny stock. And I would see this thing go up from like 30 cents up to $3. And I'm like, my gosh, if I would have put in this much money here, look how much money I would have had here. And I started telling stars. Yep. So I started telling my wife that I'm like, look how much money. And she's like, we got our first like $11,000 or $12,000. And I'm like, I'm going to put it in here. And she's like, I don't know. I think you might lose it, And anyways, I went down to the bank.
Did you lose it? That's the question.
Well, actually, I spent it because I went to the bank, and when I asked them to wire the money in, my bank didn't know how to wire the money to E-Trade. E-Trade was what I thought we had to go with. I thought I heard of Tim Sykes, and I heard of day trading, and basically there's just this whole hype around E-Trade for me. So I had to go with E-Trade, but they couldn't wire the money, so I ended up. From there, figuring out paper trading, and I started Forex paper trading and stuff. And it just a long thing of watching these stocks and not really understanding them pretty much for me.
Yeah. I mean, it takes a long time. It's, just when I think back about how I was thinking in terms of what I thought was working, or maybe, at first I got into a lot of technical analysis. I was really into that and everything. And personally, it never really worked out amazingly well for me. Like I never felt like I hadn't turned a corner. It's only when I started selling options that I started really getting a better understanding. But it takes a long time. I mean, as we say, it's you're obviously attracted by the easiest things at first when you get into the industry, because that's what makes the most noise. Like, Tim Sykes, we can love him or hate him, he makes the most noise in this industry in terms of like trading gurus and everything, and that's a lot of publicity for him, and people that hate him, they bring in more people. I mean, it's only beneficial for him. So that's the, but I think over time, like, you know, you trickle down after that, you know, on other people. You start watching like channels that are not necessarily recommended to the big audiences, and you start making your way, maybe, you know, like with trading. I mean, it's possible to learn. It's just like not obvious, you know, for example, the channels to look at and stuff like this. Like, for example, Tasty Trade, I mean, it's a gold mine for anyone that wants to learn at least theoretical options, you know.
I found that a lot of the stuff that's right there in our face is where we could have learned originally, and then the things that we chase are rainbows. So like a lot of the gurus that you're saying, and everything, traders, they want to go chase this because they're being offered something. There's that pot of gold. So having that pot of gold there entices and lures us into the wrong direction, I would say.
I mean, how could it not, in a way, you know, like when you're being promised, if you don't know anything, you know, if you don't know if it's true or false, and someone tells you, I made how much, whatever money, like in such a short amount of time, whatever, like, you know, of course it attracts you. You want to know more about it. But, you know, once you start understanding that it's very unlikely that, you know, this will happen to you. Once you start understanding this, and, you know, if you want to go deeper and try to really be try to make some money off of it, then, you know, good, you can find some good stuff after. But I think yeah, it's a complicated subject, because there's a lot of you know, it's like the gold rush. There's a lot of people selling shovels.
Well, for me, I don't really come from a position of, you know, I have this or I've made this. Like, I'm not coming from success or failure necessarily to try to educate or help anybody out here. I just feel like it's a passion to talk to other traders and to help people understand what's going on in the market for real. And as far as money goes, I would prefer that people think I always have no money, and I might not have any money because I'm really reckless with my money anyways. But, you know, I don't, if there's a lot of hype involved and they're putting all this out there, like you got to think like there's something probably not good on the other end of that for you if they're trying to lure in with that, right?
Yeah, absolutely. Yeah, I mean, after that, you know, if some people manage to benefit from it, honestly, like, you know, if they're happy with what they bought and everything, it's why complaining? You know, there's no problem about it. But it's more about like what you promise versus what you deliver. And, you know, the problem with trading is also that there's a lot of confirmation bias. So it's easy to think that you know something, that you think you learn something that's going to help you make money, when it's actually just pure randomness. And you see, because we're really good at seeing patterns when there is no patterns at all. You know, we try to make sense. Like, for example, there was like this chart, like, I don't know what it was representing, maybe in, you know, like, I don't know, consumer spending, something that has nothing to do with trading charts in itself. And they gave it to some, you know, people doing technical analysis, saying it's a stock, and then they saw all those patterns when it actually was something that has nothing to do with it. Yes, that was a time series, but nothing to do with stocks. So I think we see patterns, and we need to be careful about this. We need to be aware that there's a lot of confirmation bias.
When I first heard about patterns, it was this thing where, you know, I guess if I see this, it's supposed to go this direction. If I see this, it's supposed to go that direction. Now I see things a little differently. It's more like this is the confines that I can apply to define a trade. And I have to be aware of multiple scenarios and potentially try to profit in each and every direction that it's going in the best that I can. So I'm forming more trades on one scenario. So if there's a triangle, you know, or whatever it is, there is no, that's just going up. And just same thing with the news. If I bring the news into it, and I'm guessing you'll agree with me here, but if we trade the news, it's the same thing as a pattern. You know, we think it's supposed to do this based on this news, based on this pattern.
But at the same time, I mean, earnings are a great example that, you know, a company can have great earnings, beat everything, and still go down. Why? I mean, because honestly, if you backtest it, if you look at all the times, you know, like company has positive earnings, which should result in positive, you see it's a 50-50. Like there is no, you know, that's why personally I'm always down to sell options. For example, I'll add the money, sell a short strangle if you want to try to benefit from both sides, because, you know, when you sell an option that is around the 16 delta, so you have around 16% probability of expiring in the money, you have, you know, like an 84% probability of expiring out the money. So, you know, if you sell a put and it has a 16 delta, you have 84% chance of winning. That's just the odds, you know. After, it doesn't mean that you make money at the end, but at least you've got those odds. And after you can always roll your options, sell the other call, you know, on the other side. But yeah, do you sell options or do you buy options? What do you do?
I have sold options. I mostly buy options. I'm more if when I trade options, I mostly just scalp options. I try to keep my risk small in a the highest probability event. And if it doesn't go my way, I don't want to be foolish and try to mess around with that anymore, because I'm not the best options trader. I would say I think that the limits are to the moon with like playing chess. You can come up with so many different strategies, and this can help your trading in tremendous ways. But for me, I'm trying to keep it as simple as possible and just expand my knowledge and understanding so I can use those pieces in the game later on.
Sure. I mean, if it works, like, at the end of the day, that's what matters. Like, if it works, like, but I mean, the thing is, when you, for example, trade options, sell options, yes, there's a lot of complications that you could do. This is, as you say, it's like chess. You can make a lot of strategies and everything. But what I love about options is that if you want it to be extremely simple to the point that it only takes you like 5 minutes per month, like let's say that you sell a cash secured put on a stock you like, that has like 30 days to expiration, that will be 5 minutes a month you actually take care of your options. So it can be time consuming if you want it to, but it can also be very low maintenance if you want it to. So that's why I love it, because it's so versatile and you can adapt it to whatever way you want it to be.
What I'm basically trying to grow in myself right now is like an iron condor or something like that. Something that has predefined risk and basically I can put that together, and it's kind of a systematic approach. But then I can learn how to adapt and work that trade once I see the events unfolding too.
Yeah. I mean, like credit spreads, iron condors, they're great. They honestly really cool because you can cap your max loss. But after that, if they go wrong, like if the trade goes against you and you have sold like a tight credit spread, it's almost impossible to do anything to try to recoup the loss, because you won't be able to roll for a credit. You'll have to roll for a debit, and so lock in the loss directly. So after that, like if you trade, for example, undefined risk trades, if you just sell naked puts or short strangles, like on stocks that are quite cheap, so in the end, you don't like the buying power stays really low per trade, you can really manage, like, I mean, for example, I had like a trade on Foot Locker. If anyone wants to know how I'm losing money professionally, I had sold a put at $50. It gapped down by $10. I had never lost on like a $50 stock, $10 of the stock in a day. So it's like, a relatively big loss because it's like $1,000, but relatively to my account, I had forecasted, like my position size to be like 1% of my buying power and stuff like this. So it's really, really a small small loss compared to the overall thing. So in the end, even if you trade undefined risk, like you can manage your way, you can keep trading small and stuff. At first, I used to trade a lot of credit spreads, then I stopped, like, except in low volatility environments. But I trade a lot of undefined risk trade.
So basically, what I hear you saying is something that I love to hear. Is you're managing your portfolio with you're managing your size, basically, first and foremost. You're predefining how much you're willing to risk on each of these trades. And if it starts to go crazy or anything, there's not a moment when you're like, oh, and then you can lose tons and tons more, because before you got in there, you've established.
Absolutely. For me, I look at the buying power required to open the trade. For example, if you sell like a 25 delta put on a $30 stock, let's say that it's going to take you around $600 worth of buying power when opening the trade, when selling the option. The max loss could be theoretically if the stock falls to zero, but let's say it's like $4,000 if the stock goes to zero. But the buying power they ask right now is $600. Those $600, they encompass a move that they already forecast. That's why they're asking those $600. So if that $600 only represents like 1% of your buying power, you know that even if the stock loses like 60%, 70% of its value, you'll still be fine, because 1% is really not much compared to your overall portfolio. So that's how I size my trade. That size is probably the most important thing that I learned.
Sizing and sticking to the plan, basically.
Yeah, absolutely. I mean, in the end, like you can't know like which stock is going to betray you. Like Foot Locker, for example, like is a great example. I mean, I took that hit like so badly, but that's why you trade small in the first place. Like for me, I think it's more important to maybe have more stocks now. At least now I think like this, like to have more stocks in your portfolio rather than more risk into single positions. Because look at all the big stocks, PayPal, all the stocks, Netflix. I mean, they all lost Apple. They all lost a lot of value. Facebook. So 2021 was great because everything was going up. Now we enter the market.
Yeah, I lost a few thousand in PayPal. I after it got hit so bad, I was like, okay, this is PayPal, dude. This is PayPal. And I this was one of the times when I was like, you know what, I'm gonna be a little looser with myself, instead of doing what I normally do. And it, as you can see, it cost me a few $1,000s. So I worked back really well from that. Because a lot of other events and earnings during that time, the earnings have been pretty great for me.
I mean, on the option selling side, they've actually been terrible because, like the last 2 seasons, I didn't trade the earnings, the last 2 earning seasons. But from an option selling point of view, it has been terrible. It's been like the worst for the last year and a half. Luckily, I didn't trade them, but yeah.
I gotta imagine there's a lot of people though looking at like PayPal and any of these big stocks and just going, wow, like this is unreal. I've traded small caps, and trading small caps, trading penny stocks. You endure this stupid stuff all the time. This is just normal, But if you're trading PayPal and stuff like that, this might be the first time you're seeing it, and you're just going, you got to be kidding me. This can happen. And
that's what happens. I mean, we've had the market like in 2021 since the crash of 2020. It's been like going to the moon, like like all the time. Now it's the first time since the crash of 2020 where we've had like, on top of that, it wasn't a big down move. It was like a 15%, 20% down move on the Nasdaq maximum, I think. So it's it's fine. It could be worse, but yeah. At the same time, if you're trading too big, that's where you hurt. That's where when the SPY went down at first on the first big down move that we had, when it came back up, I started selling more puts, and then it came back down even more. But the thing is, if I don't invest during those times, when do I invest? It's when there's a lot of volatility. That as option sellers, you make the most. So you gotta invest more when there's more volatility. But at the same time, you don't want to catch a falling knife. But yeah.
So have you ever, or do you ever scalp options, just buy long puts, long calls?
No. Honestly, never. Like I try. I lost some good monies like in trades that I trade. I'd like to, just for engagement purposes, maybe just to have fun if I have nothing to do. But like I don't manage to make any money on the long term doing this. I don't see the because the thing is, if a trade goes against me and I buy the option, if I want to extend my trade, I'll have to pay for it. I have to, if I want to roll it for a debit, and I don't like that, So I hate buying insurances. Like it's the thing. But at the same time, like I think it's cool, like if it works. But for me, it has never really worked. Scalping options or scalping anything, by the way.
So then, in order to build, you have to look at things like theta, delta. I mean, you're looking at the Greeks. You need to know the volatility. Volatility means a lot if you're trading like iron condors and stuff, right?
Yep. Yeah, for sure. It determines how much you're being paid. Like, for example, you look at an option on, let's say, September 2021 and an option in February 2022, that has nothing to do. For the same stock at the same level, compared to the stock price, you're being paid like, I don't know, twice as much, just because there's so much volatility. You look at Twitter right now. I was looking at the Twitter options. If you sell like a 30 delta put on Twitter, you're making, for like a $600 buying power requirement, you're making $235 of credit, and Twitter is like $45. It's insane, to have this level of premium. So you got to look at this, at the volatility. But honestly, once you start trading a bit, once you start managing a portfolio and you have trades, that last like 30 days, and you start accumulating the different trades and managing that portfolio, it starts becoming very intuitive.
Okay, so if I'm going to put you on the spot here, but is there any way that you can tell us what's the simplest way that you could describe a spread, starting from the core pieces?
All right. A spread. So when we talk about a spread, we need to first like break it down. A spread, like for example, if we talk about a put credit spread, you're gonna sell a put, and then you're gonna buy a put at a lower strike. And basically, what is it going to do is that you're going to have the difference, the credit that you're going to receive, the width of the strike minus the credit that you're going to receive is going to be the max loss of the trade. So you're going to cap that max loss, but you're also going to cap that max profit that you would have had anyway if you had sold a naked put. But you have different types of, you can do debit spread, a credit spread. If you sell both credit spreads on both sides, you're going to do an iron condor. I mean, spreads are great, especially if I would do spreads personally, that would probably be on the long side, debit spreads, because you can start trading like bigger value stock, like higher value stocks. And debit spreads can be great because they have a bigger profit potential compared to credit spreads. But yeah, I mean, credit spreads are great because they don't, require a lot of capital. Usually, if you sell, for example, a credit spread, you can sell a credit spread on Facebook, for example. It will only cost you $200 maximum, compared to if you sell a naked put, it will cost you $2,000. So it can be quite useful to trade credit spreads. But the negative side of them is that credit spreads, they're very, very hard to manage, except if you sell a very if you buy your long leg that are very, very far out of the money, like you sell the 30 delta and you buy the 5 delta, for example, then it's possible to manage your credit spread when it goes wrong. But if you, let's say, sell the 30 delta and buy the 25 delta, if it goes in the money in your credit spreads, there's no way you're going to be able to try to roll it for a credit, because that's where the whole game is, in rolling the trades and trying to after that manage your portfolio. Like you're just reducing your cost basis when you're collecting credit.
So I just learned recently from Anne Marie and then you as well, I didn't even know this, that basically the delta can be used to relate to the probability of the trade working out or not working out.
Yeah, basically, yeah. So if you sell, for example, a put option that is at the 16 delta, so 50 delta is where the stock price is. If you go out the money, it's going to be like 40 delta, 30 delta, 20 delta, etc., until zero. And if you go in the money, it's going to be from 50 to 100. If you sell, for example, an option that is like at the 16 delta, then you have 16% chance, your option that you're selling has 16% chance of expiring in the money, and so 84% chance of expiring at the money. And so, for example, if you're selling a cash secured put, which is probably one of the best strategies, for beginners, that's how I learned most of the mechanics of options, is by selling cash secured puts, because it's a very simple strategy. It's a very safe also strategy. Pick a stock you like, a cheap one, sell a cash secured put, be assigned, learn how the mechanics work. Like once you start doing this, then you will pick up a lot more about how to trade options, what is assignment, what does that mean collecting a credit, stuff like this. So yeah.
I think the biggest thing that keeps people out of selling options, especially, is what you just said: assignment and things that can go wrong. Like I heard somebody that they have till 4:30 to assign, or basically. So they thought 4 o'clock it was done, and then come 4:30, it ended up becoming assigned to them, or they ended up losing huge, like really.
What happened there? I can't remember, because I think it was in 2021, like at the beginning of 2021 or something. It's like I remember Project Finance now. He had made like a video, like $30,000 loss and something. I think that's what you're referring to. I think that it's because you have 1 hour and a half after the market closed to exercise your option, and the stock price after hour went in between of the short and long. So the long option expired at the money and so worthless, and the short option expired in the money, and so it got assigned automatically. But like honestly, if you're trading like small and you go for lower cap stocks, I made a watch list, of like smaller cap stocks when I started trading options, because I didn't have the capital to trade, higher value stocks. Like, if you trade an Amazon or Apple or whatever, you're gonna have like, if you want to trade safely, you're gonna have a very good amount of money at first to trade with. I didn't have that, so I started building a watch list of stocks. If you want, I'll send it to you. You'll put it on your stream or something, the link, because it's like you just have 50 stocks like American Airlines, Carnival Cruises. All those stocks are very cheap, good liquidity, good option, tight bid ask. You can do your thing there, even if you have a small account. That's what I did.
So yeah, that's the biggest thing for me. If I'm trading options, one of the first things I look for is that, it's actually fluid. Well, let's go even back further. This is beyond even options. I'm going to grade a stock. I need to find out that it actually has options, that people can short the stock. I need to know that I'm not just trading some institutionally owned garbage that's looking like it's going to do a lot, but what it's really going to do is trap every single whack-a-mole. I call it whack-a-mole. It's like a really highly skilled game of whack-a-mole where each person gets in and they're good at what they do, pretty much.
Yeah. I mean, there's a lot of, I mean, honestly, if there is one thing that I try to avoid myself, that honestly, I think it's by far one of the most useful thing I do is to avoid meme stocks, is to avoid, like, if you see, there's this stock, like, I forgot the name. The ticker is RIDE. And it went from, I don't remember exactly, but like from $9 to like $80, came back to $5, and now it's been there like for like 3-4 months. Like when you sell a put on a stock that went from $9 to $80 in the span of a week, like it's highly likely that something bad is going to happen in a way that it could also go back down to $9 the week after. So you have a lot of implied volatility. You make a lot more money when you sell options on the stocks, but you also, honestly, it's not the best thing to do for your portfolio. I mean, it's like your money that you trade. So I try to be personally mindful about it, and I don't want to gamble it.
Yeah, always look left and know the bag holders that are sitting there, because there's a lot of hype, gets those things moving immediately, and everybody loves it when there's all that action.
Yeah.
But once it pulls down and then pulls down more and more, and nobody's looking to come in there and buy you out. Nobody wants to lift you up and give you money.
For sure. But you see, I think they have their place. I think it's great. Like for example, the GameStop in January 2021. I mean, I was in. I had like GameStop shares. But AMC shares also. But it's just that it should be a very tiny proportion of your capital, of your portfolio overall. So the funny bet that you're putting doesn't put you at risk financially speaking. Like I'm going to use maybe 1 or 2% of my account on a very volatile thing, because I just think, why not? And I could make, if I can sell an option that can bring me a lot more money than usual, I can try it out. Yes, if I get burned, well, that's why I only traded 1%, 2% of my accounts.
Yeah, that's basically it. There comes a point when there's scratch offs where it's less trading and it's more of like getting a scratch off lottery ticket almost. So going with the grading system, if I have something that literally you can't short it and it has no options, I'm gonna want to stay so small that maybe I put $100 bill in there, and if it works out, then it works out. If it doesn't, it doesn't.
Absolutely. I mean, I've got like, it's like now we may be going beyond options, but I've got some cryptos. I've got the main ones, but I've also got some, like, let's say, funny ones that I would say that are in my portfolio. If they go to the moon, as we said, then cool, great, I'll have been in there. But if I lose it, it's not going to change anything about my life or my portfolio or anything. It's just, I wanted to get in the train. So it's cool because I think they have their place, the meme stocks and everything. Like they definitely have their place, but it's just about being mindful, maybe about the size that we're allocating to each. I was going to call that asset, but it's not an asset, but like to each thing, crypto or stock or whatever.
Well, what I like to say is if it's moving, I can make money. So there's no point in me saying there's no way I'm going to trade this at all. But like you said, position sizing is key. Making sure that I'm not risking what I need to make a living over in some garbage. That's not something.
Yeah.
Although I do.
Please.
I was just saying that I do find that a lot of times those stocks are easier to trade. Sometimes trading the SPYs and the Qs, man, can just kill you. But trading a penny stock, it's like almost so predictable that they put the new guy on it or something. I don't know.
Yeah, I mean, I think I'll always be on the side of the S&P or the Qs, or trading, stocks like relatively, big stocks or more liquid. Just because like I'd rather be in a liquid market where there are like a ton of participants. I don't want to be like in something that is so sensitive to anything. It's like you trade, like, let's say you take a company like Walmart. Yes, you're not going to make any money selling options on Walmart because there's almost no volatility, so no premium. But you know that you're not going to wake up one day and have this Walmart at $10 per share or $0 per share. It's possible. But it's highly unlikely.
Well, another thing though is you probably don't just come in there and zoom in on the time frame on a little portion of the chart and basically like that's all you're seeing. You're probably you've backed up and you're looking at this from a bigger time frame than just the next 5 seconds, right?
Yeah. No, for sure. I mean, any trade that I take, I mean, the chart that I use is the daily chart. So any trade that I take will last probably 30 days. I have some trades that I've had for like 5 months, like so. It really depends. Some trades are quick to close, like 10 days, 15 days. Some are like way longer. I mean, yeah, I don't take like day trades. I don't scalp. I try not to. I think it's a lot of fun, but it's also it can be for me it's a great way of losing money, so that's why I avoid doing it. But
Yeah, what I've learned from that is just basically don't chase the head. If we're gonna be day trading foolish stocks, just wait, be patient. You can if you get a nice solid support, like this is when we might want to look at these things. But when they're actually whipping around and looking so awesome that we're like, I gotta get in that, that's the moment that they hit the pause button. You might see a few cents profit, and then from there it just gets worse and worse and worse.
yeah, absolutely. I mean, to your point about, I don't necessarily use like any technical analysis like support and resistances, but if there is one thing I do that maybe helps, that can help some people out there, is that I'd rather, if a stock ranges from $30 to $35 per share on a, monthly basis and everything, I'd rather sell a put on this when the stock is at $30 than $35, just because the stock is lower. So for me, I feel better selling a put when the stock is cheaper than compared to what it was. But apart from this, like honestly, I think anyone can do it. Anyone can do it even at low maintenance, selling one put a month or something. But yeah, I mean, how's been 2021 for you? Scalping options, performance wise, like how have you been doing?
For me, I basically it's some days you feel like I feel like I'm unstoppable. I feel like I just want to like kind of make fun of the market makers a little bit. Like there's no way they can beat me. And then comes that humbling moment when it's like, okay, this is still trading. This is exactly what I've learned in the past. I got to be careful in here. I gotta watch what I'm doing, and I'm not gonna be able to. Basically I got to protect my growth, and I see myself still being foolish and still giving up gains that I shouldn't give up. I'll trade things that have nothing to do with my trade plan, kind of just for fun over here, and I'm risking like 20% of the profit that I've made over there, and I'll end up losing it. It's like you knew you were going to lose that. Like you knew that if you touch this right now, you're going to lose it. So me, I have a long way to go to grow up. I like to do foolish things. I like to play in the freeway, as I say. I scalp, garbage penny stocks to scalping like the SPY and everything. But like back to what I was saying earlier, though. I think the SPY is actually more difficult, and the Qs are more difficult. They have better market makers than a lot of the smaller junk stocks.
When you have a 1% move in the SPYs, you've got like a 2% move in the Qs. So it's more volatility, more premiums, bigger premiums and stuff. But yeah, it's just but when you scalp options, like what do you use? Like do you have like a trading plan? Like do you use mostly technical analysis, or how do you determine like what's a good entry or what's a good exit? Maybe.
I'm looking at price on the chart, just the candlesticks. I'm looking to see where there's some sort of support. Basically their backs are against the wall. I want to make sure that I'm in a place that's they've already pushed. They've already, we're reaching exhaustion or something, let's say. So I want to patiently wait out the move, and I want to seek this area of exhaustion once we've already seen who was trapped and who was losing and how that was playing out. And once we can see those people getting a little bit of profit, and then we find support in that, and it's continuing to give them profit, the likelihood that now they're no longer fighting against that direction, whatever it is, price action, supply and demand. I say they, but they doesn't necessarily mean that there's some like, Darth Vader out there attacking us. But I use pretty much support and resistance and levels, and I don't really look for triangles, and I see them. I see all these different patterns and all that. But again, a pattern is just it's a way to define the trade. It's just a way for me to say, if it's here, I don't want it no more. If it's here, I don't want it no more. And if it's within this, I can do this, or basically however I can work it. So I let the price and I let the chart tell me what I can do to work a trade at that time. And I don't really know if I can, but basically it's just fun for me to get in there, and I'm able to work in each direction, and I can see that I'm taking this profit, and then every cent we work back this direction, is more money in the bank for me. And I don't know. It's fun for me. It is. It's like a hobby, and it gave me a purpose. I got hurt in the military, so getting into this really just gave me a purpose and place to be. And I forced myself to learn. I was falling asleep over and over again, watching videos and reading. And man, I had the most boring people, because I didn't have that much money for anything to buy courses or anything. So I'm going to like Skillshare, and there was this one lady on there. She talked so slow, and she was just reading a definition to you, And I played that video at least 3 times, and it was hours long. And anyways, but putting myself through that, I started to learn. And like I told you, I still make stupid mistakes. I still do stupid stuff I'm not supposed to. But I've learned to take chunks of that of my account, my capital, and put it over here in the safer areas. Like, let's have this be something that grows this way. This grows this way. And if I'm going to do something stupid, I'm doing it with something that I've designated as stupid money. And even now, the more I understand taxes and stuff, I don't even want to do the stupid money no more. Like, it's because this is basically the wise people. They knew what they were talking about all along. The ones that we don't want to listen to in the beginning, the ones that were like, oh, well, yeah, everybody can do that. The ones you should eat. You should eat right. You should drink a lot of water, or whatever it is. Kids don't want to listen to that. Well, I didn't want to listen either.
I'm sure. Yeah. I mean, that's why, like, when I was like 18, 19, I started getting more and more interested into that. I wanted to get the quick profit. I mean, that's why you go for that, because obviously you don't want to listen that, you're not going to find anything if you chase any quick money anywhere, like ever, or it's very unlikely. So, you go there at first, and then you burn yourself, and then you realize, well, maybe they got a point, maybe I should do differently. That's how you do everything. But and so you do everything that you said, like you only buy options. You don't sell any of them.
Well, I have sold options, and the first time that I've sold options was a complete accident. I was using the Thinkorswim app, and I didn't realize, I can't remember what it is, but there's something in there that changes easily when you're getting in and out of positions.
Yeah.
So anyways, I just hit it. I hit the buyer, hit the whatever, let's go. And it ended up selling them. I'm like, oh man, just oops.
Yeah. I mean, honestly, I think, do you look at the implied volatility then? Do you look at this type of things like the IV rank, or maybe, theta? What options do you usually buy in terms of delta, for example?
Well, see, for me, this is where you're the expert, and I'm just growing in this. I look at delta, I look at theta, and I'm learning more about implied volatility. But I'm not an options expert by any stretch. I'm just looking to basically, where can I add more tools to my toolbox? What can those piles of safer money that I was telling you, safer capital, where can I add to maybe a new pile that I can start working on, a new chess game?
Got it.
So I can start to safely grow that, and I can say, okay, well, this has a likelihood of maybe getting 9% this year or something, whatever it is. I don't care. Just, I want to start to figure out the pieces and let it grow. And I think options in trading is it's an evolution that's going to have to happen for most people if we really want to, just like I think people drag their feet on taxes,
Yeah, I mean, we're one step away from everyone selling an option once a month. That takes 5 minutes. Honestly, like, I see it so much that now people buy their own stocks. Like, no one goes on their bank and buy their own stock. They all have either Robinhood or the equivalent wherever they are. And that's just where it is. So for me, the options is one step away. Maybe not right now for most people, but I'm sure that more and more people are going to get into this.
I mean, and I think that a lot of people, even people in our chat here, like Blind Trader Mike, he wants to learn options, but he doesn't really understand. I don't think, I'm not sure at this point how much he understands, but I remember asking him, and he's basically at the bottom. Like, what is an option? Like, this is a contract to buy or sell. And then we get into calls and puts, and calls and puts is pretty complicated. When you hear this for the first time, you're like, a caller. But I don't know what a caller is. Sure. But it's just a contract that you can either buy or sell something, and then you can flip and you can write that contract, and then you're now obligated, because you wrote that contract.
Yeah. I mean, the best way for me, I understand it, and I usually try to communicate it is, imagine like you're in, how insurance companies make money. They're going to sell insurances to people for whatever the car, the house, whatever. The whole business model of the insurance company is based on math, is to have enough people that don't have accidents, so the ones that do have an accident with whatever they're having an accident with, it still doesn't affect too much the bottom line. And honestly, when you sell options, that's how you can see it. When you buy an option, you buy an insurance, except that it's not in a house, but it's on the stock, and you choose the price, except that now this time you can flip it around and be the insurance seller, which is for me a lot more interesting.
Yeah, I like how you put that you're now the insurance company basically, and you're writing the policy for somebody that's supposed to protect their position, but we have 80 to 90% chance that these policies are going to expire worthless. So this gives you the edge just from the start. Yeah,
I mean, also, I know that there's like those, I don't exactly know what is the exact number of options that expire worthless and everything, but when you see it from a point of view of like reducing your cost basis and how you sell options, if you sell an option, and you collect $1, the stock goes against you. You buy back your option for $150, so you make $50 loss. But by doing it again, by doing the same trade again and rolling it to the next month, you collect another $1 of credit. So now you collected $200 in credit in total, and now you don't need the stock to come back as much in your favor to recoup your $50 loss and make a profit on top of that. So instead of needing the stock to come back from, for example, $15 to $10 to, let's say, $15 again, compared to someone who have bought shares at $15, now, because you roll your option, you only need the stock to come back to $13, for example, instead of $15. That's where the real purpose of selling options is. If you compare it to someone that buys the stock at the same level as someone who sells a put, you're going to be able to reduce that cost and come back at break even sooner if you get into a loss when you trade options.
That's the kind of magic that I'm looking for and growing in my options trading.
It's crazy. It's crazy. Like when you understand that, after that, you're like, well, if you trade small, there's two kind of trades, like the good ones and the bad ones. If you make the bad ones small enough, then like life gets good after.
See, one thing for me, I've never rolled options, but I've heard rolling options. How do you make that lucrative for you to do? Like, you're just essentially locking in a loss and reopening a position, right?
But the way you see it is, for example, as I say, if you sell an option and you collect $1 of credit, so $100, because one option is 100 shares. So if you collect $1, so $100, the stock goes against you. You're in a loss of $50. You're going to buy back your option, so pay $150, and to make a loss of $50, you lock it in. But you're going to sell the same option in a later expiration or a different one. But you're going to collect, when you sell that new option, a bigger credit than the loss that you're locking in. So you're selling an option at $1, you're buying it back at $150, and then now you sell a new option that brings you $3. So now you have collected a much bigger credit, and you're reducing the level at which you need the stock to come back at, compared to someone who would have bought shares. It would be higher. It's hard to explain when you need to do it, but like what you need to think of it is like, someone that buys, for example, shares at a stock at $10 and you sell a put at $10. If it goes against you, by collecting a bigger credit when you roll your option, you only need the stock to come back at $9 and not $10 anymore. And if you keep doing this over and over, theoretically, you could reduce your cost basis as the stock goes up and down.
This sounds like something that I need to
It sounds complicated. No, honestly, it's a lot easier to do than it is to discuss. That's why I always try to show examples in my videos, because it's not really the most intuitive thing at first, but it's really useful once you know how to do it. And even if, for example, let's say you want to buy shares of American Airlines, for example, a very cheap stocks on which I learned how to trade options. I started selling cash secured puts. So cash secured means that you put $1,500 aside in your account. You know that if you're being assigned on your puts, you won't have to buy the shares, so you have it secured. You start selling your cash secured put, and then you learn how it works. And then that's what I did. I started selling cash secured puts so as to be sure I wasn't going to be in trouble, and started learning that way.
Well, anybody in the audience, if you guys want to learn, JC has an amazing YouTube. He tells you all this stuff, and he shows you not just two talking heads here. He actually shows you what's going on and how these things work, breaking it down into the simplest. What is an option, and then like you said, that basically you're acting as the insurance company when you're writing options, and then now basically just about any of this stuff. So if you guys want to go check that out, I think it would definitely help you. It has helped me. I've watched your channel, and because like I said, I started not really understanding anything about options, and I knew that I should get over there and I should learn something, but it just seemed like this because I didn't do it, because I didn't understand it, it was hard to push myself in there. And then once this starts to unravel, you're like, oh wow, oh
sure, absolutely. But usually how it goes is that it can seem very complicated at first. So you learn one bit there, and then you start connecting the dots, because you learn what's a call, what's a put, what it's like to buy one, what it's like to sell one, etc., etc. So it's normal that it takes time. I think. I mean, it took me a really long time to understand how to manage a portfolio and everything. But then once you know how to do it, it's done. You don't have to learn it again. So.
And for me, one of the biggest parts of my trading now, ever since the GameStop and AMC deal, I've seen that it's been much more, I would call it algoed up. The market has been much like beast mode, as far as the algos go, a little more aggressive. Like somebody wants to get their money back, So what I've been doing is I've been looking more for a hedge in everything I'm doing. I'm looking to work this in the best way possible, to where I can profit the most off the hedge as well as the core position. And then what you're doing here, it seems very similar to something like that.
Yeah, I mean, I think in terms of hedges, like I don't know if there's a perfect hedge. Like there's a great book that goes a bit like super far in terms of details, but it's really good. It's a book called Dynamic Hedging from Nassim Taleb, which is a very famous like option buyer. But he buys, for example, he focuses on the tail event. So he's going to buy the very far out the money option that happens less than 1% of the time. But then when he's right, he's really right. And he talks about hedging and stuff like this. What I do personally is just I'm going to have like a bunch of long trades and short trades in my portfolio, and like I'm trying to get advantage of both sides. But I'm more, I think, in terms of hedge, I'm just way more invested on the put side, than the call side. So I definitely sell more puts than what I sell calls, just because I think the market grinds up over time. So it makes sense that I just ride along. But yeah, I mean, stuff to really hedge, because you're just by nature erasing and deleting the profits that you're making on your initial trade. Because if you sell puts and then you buy SPY puts, it cancels itself.
See, that's what I used to say, and that's what I used to think, that if I hedge, all I'm doing is muting profit potential, and there is the worst case scenario. Let's say you go dollar for dollar, that you would lose every dollar you're making. But I found that in the true event of how the market trades, that I can make a lot more money with my hedge and my core position than what I do simply with the core position.
Sure, absolutely. Having some opposite, trades, like for example, I sell some puts, so I'm bullish, but I also sell some calls, so I'm bearish and bullish at the same time, So you can benefit from both direction, I for sure. But usually, if you do any kind of hedge or whatever, you're going to maybe not reduce completely, but you're going to soften your profit potential that you could have made in your initial bet, which is fine. Personally, that's why I sell calls on top of selling puts, so I can make money on both, when the market goes both sides. And the beginning of 2022 has shown that it can also go down. So it's useful, in this type of case. But in period like 2021, I was getting burned on the call side like every month. I was selling puts and calls, but as the market was just grinding up, I was getting roasted on the call side. So I finished 2021 by just selling puts.
Yeah, that's a difference that should be distinguished here. Is I'm talking about short-term volatility. I'm talking about getting in, getting out, taking advantage of what's happening for the next maybe couple hours at the most.
Oh, okay, yeah. So very intraday.
Right. So, and what you're talking about, absolutely, you would be is if the trade works out according to your thesis. From what I'm saying here, you would lose dollar for dollar, and that wouldn't really help you much, or you would cushion that, maybe 50%, 60, whatever percent you have, you'd be losing. But for a longer term outlook, I would prefer the trade to turn against me. I would prefer to, let's say I want to buy the pullback on the SPY. I'm going to now hedge, go short the Qs or, whatever. And then if this goes against my core thesis that the market always goes up, market's going to go back up, I'm not losing all that on the way down. And then I can actually lock in that hedge at something that I determine to be exhaustion. I might be able to get a new entry in my hedge and then profit again as it goes back down again, and just keep doing this until finally we start to work our way and change direction. We reverse back to my position, and then now I'm not afraid to get into my core position, which I would have been before. I'm like, is this really the pullback, or is this the time the market crashes forever?
Sure. I mean, of course, I agree with you in theory on everything. After that, we all know that in practice, when you're there and you see the market falling, how low is the market going to go is always the question, because it's like, for example, if I sell some calls that, act, let's say, as a hedge in my portfolio, and the market goes down, so my calls are in profit, am I going to sell new calls now that the market is lower and potentially get, pinballed, like now that the market is going to come back up, and I'm going to miss on profit on the put side? So it's tough. Like, it's always tough because we never have the benefit of hindsight, of course, to know how low is the market, what is the bottom, and how do we know it's actually going to come back up. I thought right now the market was going to come back up to the levels where it was at the beginning, first days of the trading year, but apparently not. So, we gotta adapt. But I agree with you though that like having both directional trades on is always useful. I found that it's way more profitable to sell selling naked puts, selling short strangles at the same time, so as to really benefit from all those directions rather than just selling one direction.
Right. For me, the magic is just that, first we no longer have to fear the things we previously feared, and I think that's the whole thing about trading is we're going to be wrong. Like, I said 65 EMA. This is a point of interest. 65 EMA was completely ignored, went right through it. That means something for whichever direction it's going. But, a lot of our plans and a lot of our ideas are going to just be ignored often, So taking those things that we've learned that can be dangerous for us and putting them in a little cage. As a trader, I think that's important to lock these things up and figure out what we can do to protect ourselves to where we're not at an infinite risk. We're not at a larger risk than what we had originally planned.
Absolutely. That's number one priority all the time, that I try to think about. It's, when you sell options, you talk in terms of buying power used in percentage. So you have got like your account, it's 100%. At any given time, I'll invest like 30% of my account maximum, and that determines how much risk you're exposing yourself to. The bigger the buying power used, the more risk you're exposing yourself to. So it's always about managing risk, trading small, and being mindful about the environment that we're in, maybe following the VIX. That's what I do, going to more or less invest my capital depending on where the VIX is, because it gives me a pretty good, market view on how much the premiums are at, and what is the outlook on the market, what do we expect from the S&P 500, So I think it's cool to, if maybe have some people out there to use the VIX and stuff. That's been super useful for me to know how much should I invest, more or less,
Do you have I'm sure you have a video on that, how you use the VIX?
Yeah. Yeah, I do. I've got a couple of ones. I basically like what I used to do over 2021 that worked like greatly for me is every time there was a pop in the VIX, like the S&P was going down. I was mostly long, the market overall, but I was selling some call credit spreads on the VIX when it was popping up to like I don't know 30 or something, and I was doing this the whole 2021. I mean, it's great because you know that even if the VIX goes higher, it's very, very, very likely that over the next, 2 or 3 months, it will come back down to lower levels because that's the implied volatility of the S&P 500. That's not a normal stock. That's a volatility product. So, that's for me, those trades, they have been great.
Well, I would like to include some of your links in the description for this video. I mean, I appreciate everybody coming to join us and listen to our conversation and everything, but that's basically what this is, we're just more or less having a conversation here. But if you really want to get into learning these options and understanding more how you can use them for yourself, I think JC has an amazing YouTube channel, and it tells you the things that I just found when I was new in this, looking for educators, that a lot of facts were missing. It seemed like a lot of they were just rehashing the same information over and over between trading groups, and so like getting assigned, some assignment or anything like that. These are the things that everybody they're thinking about and worried about, but nobody's giving the answers. And I found on your channel, you actually give these answers. You tell people how your trades have went wrong, how you've lost money. You're transparent and letting people know that you've lost money. So I go ahead.
But for example, one very good you were talking about it, assignments. When you were being assigned, I know that's a very big fear in general that people have when they get into options, and I understand it. I have the same too. But there is, like, when you sell options, there is extrinsic value. That extrinsic value is, for example, the volatility in the market. That is going to make the option prices fluctuate. What people think of the stock and what is going to happen, that is going to be priced in the option. And also you have how much time there is between now and expiration. All of this makes the extrinsic value. If you exercise an option and you bought an option and you want to exercise it, you're going to lose that extrinsic value. You're going to lose all that money that you paid for. That could potentially turn out in more money if you had kept the option. So long option holder are not really incentivized to exercise their long option, except in very special cases. For example, if you have an option on, let's say, Walmart, the rest of the extrinsic value is, let's say, $20. But you're going to have to receive the dividend. If you exercise your option and get your shares, you're going to receive $50 worth of dividends. Then now it makes more sense to exercise your option, get the shares, get the bigger dividend, than keeping the option and losing, and because you're not going to make as much money by keeping the option. You're going to make more money by exercising it. So once you understand this, it doesn't really, you understand that it doesn't happen often. 1 week ago, I got assigned, it happens twice in a year, probably, that I get assigned on out the money option. It happened 1 week ago. It was on the stock gap. If you look at it, I sold the 27 puts. If you want to know one of my worst losses I had, I sold the 27 puts on Gap. It's now around $13. There was no extrinsic value left, like maybe $1. I got assigned on it. What happened? Well, I had to buy 100 shares of Gap at $27 per share because that was my put strike. So I had to pay $2,700. What I've done is that I sold back my shares and I sold back a new put in the next expiration, and that's it. Case closed. So you see, it's not like it's not a big thing. It's just that when it didn't happen to you, if you do it on a very, very high price stock and you don't have the capital to handle the assignment, then you're going to get into a margin call, and it's going to be a bit stressful because the broker will force you to close the trade, or they can close any trade in your account, because when you open a margin account, you give them the right to close any trade in your account. That's something that people don't know. I learned that from someone else. So you have to be careful with just like the size of the stock and stuff. But otherwise, that's fine. That's no big deal.
Yeah, this is great. What's that?
Sorry, that was longer.
Oh no, this is great information though. That's what I'm saying. I just keep preaching it that I would like to see everybody go over and check out your channel. You got a lot of great information over there. And as far as options go, I think that you've taught me quite a bit, and Nick Shaheen as well. I don't know if you know Nick Shaheen, but he's really great with
What was the name of the channel?
Nick Shaheen, he's over with Benzinga. He has and he has his own thing too. But anyways, his information is pretty great with options. Me, I'm just the small guy looking to grow into options, and
you need to teach me how to scalp options, then how to buy options, like, because I'm bad at it. I just never made money scalping options, so you need to teach me that.
For me, the thing that I learned is just to avoid the pain. If you're going to scalp options, the first thing that's going to happen if you don't get it in the very best, sweet spot, I guess you can call it, is it's going to start to zigzag and do what it does, trading up and down, the waves, whatever. Yeah. And you're just eating away at all your profit. So even
how far are the options that you're buying? What is the expiration usually?
I try to go like a couple weeks. And I try to trade at least in the money or at the money. I don't want to trade anything out of the money. I want to trade at the money. Basically, that's my goal. I want to be at least at the money and or slightly in the money, and I want to have a little bit of cushion as far as time goes. But I will trade, again, just same thing as a penny stock. I will trade like garbage, reckless. It's expiring today even. I'll do that. But when I do that, I know what I'm risking. I'm not going to say that I'm going to put $2,000 here, and then if it turns against me, I'm going to put another $4,000 here, and then I'm going to put another 12,000, whatever, and at that point, like, okay, now I'm going to win because I just now fought this ridiculous. No, it's like,
I think it's but obviously when you go for very shorter dated options and you try to buy them, the theta, the time decay of options gets way bigger in the last month of expiration. So the theta, like, maybe for those who wouldn't be aware, like every option lose some value every day, and we refer to this as the time decay. And what if an option is like 60 days for expiration, you will probably lose $1. If it's like 5 days to expiration, you probably lose a lot more, relatively to the option value. But obviously what you're getting into when you buy like an option that expires like on the same day and everything. It's like a hit or miss.
Yeah, dude, all I'm saying, man, is we need to get you back here. You got amazing information.
Thank you, appreciate it. But that was that's great speaking with you and understanding a bit how you can trade options in a different way that I do. I never scalp options, so it's interesting to learn more about it.
Yeah, for scalping options though, it's really simple. It's got to be they have to have their backs up against the wall, and you have to be able to take a loss, and your loss is going to be big. Your loss is going to be like 20% to 30%. That's the small loss. And if you wait and you're like, well, is it going to come back? By the time you've said, you've already lost down. Now you're 50%, and now it generally will sit there for a few. You might even start to come back towards that 30%, at that point. Sure. But, there's no telling what these options do. So if from
you should see the percentage losses on some of the trades that I had in the past, like some 400% loss on a short put that I had sold, because when you sell options, you can basically lose more than what the credit that you receive. So it can go past the 100% like super easily. So I had like in the past 400% losses, 500%, but that's why you trade small, that's why you roll in, etc., etc.
Yep, exactly. But it was great having you over here, and I'd love to have you back again and maybe get into some more of these, the working parts of all this. Maybe put something up on the screen for everybody to see, so we can see what exactly, basically, what are the working parts? How do we put on that kind of trade and be able to visualize the loss? But like I said, you already have that on your channel, and we can go ahead and check that out over there.
Sure, absolutely. Not wanting to do any plug or anything, but I realize that this is, sometimes a subject that lacks a bit of practicality. So the last video I made, I tried to explain it, like how I really build portfolio myself. So if anyone wants to have a really practical approach to it, you can check out my most recent video. I try to be as practical as it gets. It's really what I do on a daily basis.
Well, my goal here in inviting you on and any of the people that I've invited on, I want new traders, out here that are looking for education to understand that there are traders out here that give you real information. They're not just marketing to you. They're not just trying to, fill their pockets with whatever. Just guiding people the right direction. So helping direct people over to your channel is exactly what my goal is in doing this. I want people to know where they can go, where they're gonna be able to use this for themselves rather than being guided.
Sure.
The marketing misguides traders, I think.
Yeah, 100%. I mean, like that's why I started my channel, because when I started, like, I was like a couple of years ago, there was not all of this. So at least if there was any guy on YouTube talking about trading, it was for the wrong reasons, because they wanted to take my money. So, like I started my channel. So hopefully there is a guy like me, that like a couple of years back wants to learn how to trade options, he can find something for free. But, like there are great resources, Tasty Trade, Project Option, David Jaffe from Best Stock Strategy, like, like those channels, they really teach a lot, and it's free. It's like a video. Like the only thing is the ad. That's as worse as it gets.
But yeah, thank you so much, though. I really appreciate all the great information. I'm gonna go check out that book that you mentioned earlier, and I need to really get down with that strategy that you were teaching us.
If you want a book, like something that just appeared recently is from Tasty Trade. It's called The Unlucky Guide to Investing in Options. Something like The Unlucky Investor, something with the word unlucky. That's a book that they just released. It's a great book that explains basically everything about options, and at a very basic level. So honestly, I definitely recommend anyone to check it out.
All right, JC, I really appreciate you coming and joining us today, and would love to have you back anytime. Look forward to talking to you next time. Thanks.
Thanks for having me.
You have a good one.
Bye-bye.